Hello, everyone. This is Douglas Auclair, known online as Joff. I own the company Logical Graphs, and we're going to be talking about my cryptocurrency portfolio today and why I do this thing. So let's get to it. Um, let's talk about the why for a moment first. Growing up as a little boy, I would watch my dad work at his roll-top desk, going over papers and papers of various investment instruments, particularly stocks. And he would invest in, for example, banks. And he worked with his broker at Merrill Lynch. I say this because I learned about investment at a very young age, watching my dad um, trade and hold stocks and some bonds. And I don't think that a lot of people have in their history a parent who did that for them. So they're approaching investment from totally fresh perspective, which can be great, but also can be scary. And so what is my purpose? What am I doing here? What am I doing with my investments? First of all, I have a family. I have a wife and two daughters, both in college. Um, and I have a job. I work as a director at a large um, uh, agile consulting firm. And so I get paid $208,000 a year, which puts me at the top 1% of income of the world. And I'm not going to make it. If I should stop working tomorrow, I will have enough money to last for a little bit of time, but then I will need to go back to work, or I'm going to lose my house. I'm going to lose my car. My kids will have to come home from college. So if I, who am making $200,000 plus per year, am not making it, am not saving money for my retirement, so after I stop working, after I am unable to get another job that pays this much, um, how are other people in the world making it? And my concern is that they're not. And so the reason why I set up this cryptocurrency portfolio is I wanted to prove that a person starting with no money, no investment, and investing $100 a month or $1,000 a month could build a portfolio that would fund their financial independence and the retirement. And so that is my whole purpose for this cryptocurrency portfolio. One, for my own financial independence, so that I can say to my job, I'm taking off, I'm going to do my own thing now. Um, and still pay the bills and still pay for my daughter's college and still pay for the house and the car and everything else. That's one of the primary focuses. The other primary focus is to show a methodology of prudent and prudential investment that anybody, anywhere where in the world can do. If you take 10% of your income and on a regular basis move that into an investment portfolio, then I want to demonstrate that you too can make it. And if you know me and you see how I do my work, I'm very public about what I have in my portfolio, what I invest, and why I invest it. I will link in this video a link to the list of articles that I've written. They're listed in my blog and to my Twitter account. I tweet daily about what my investment portfolio looks like and what trades I'm doing. I want to show that me starting with no money can build an investment portfolio where I can retire off of. I mean, it's very easy to show that you make a huge amount of money if you already have a huge amount of money. I don't want to demonstrate that. I want to demonstrate, and I am demonstrating, that if you start with no money and you invest regularly into that investment portfolio, that you will be able to become financially independent. And how do I know that? Because both my father and my mother started with no money whatsoever. They invested regularly and prudentially. And my dad was able to retire at the age of 50. He hasn't received a paycheck since he was 50 years old, and he's more than 80 years old now. So he's lived off his investments and helped other people for more than 30 years. My mom started with no money. She invested $50 a month, and she was able to build a portfolio where she had more than $1 million in her portfolio when she died, God rest her soul. So I have proof in my family history that it is possible to start from nothing and build up a portfolio that supports not only yourself, but the ones you love. I am also going to start from, I have also started from scratch and am building such a portfolio. And let me be your dad. If you don't have a dad or you don't have a mom who's a successful and prudent financial investor, let me be your dad, your crypto dad, um, and show you step by step how to become financially independent and wealthy. Um, Now I have a core set of tenets about which I hold to myself a set of standards, and I will also hold anybody else to those set of standards. I believe in politeness. I believe in dignity. And part of dignity is that I'm not going to tell you what to invest in or how to invest because your dignity, your investment portfolio addresses what your dreams and goals are, not what my dreams and goals are. I can tell you how to invest to invest for the dreams and goals of a dad of two daughters and a husband. Um, but I can't tell you where you are at in the world. For somebody in Asia, making $20 a day would make them financially independent. So they have a very set of different investment goals than I do. But what I can tell that person is if you invest 10% of your income over time, you will accumulate the amount of funds you need to make your own dream come true. And that's my investment philosophy. Another tenet that I hold is that you need to know where you are so that you can measure how you're doing now and you can figure out how you're going to get to where you're going. So to that end, and let me share my screen, what I do is I measure every day of every year my investment portfolio. So you see, when I started investing in cryptocurrency, I started with $2,000, $2,245.59 in cash, a total of $6,000 invested. That was what I started with in 2021. Let's fast forward here so that in 2024, yeah, a second. In 2024, I now have an investment portfolio that is worth $100,000 from that initial $6,000, which I contribute to regularly. And it says that I have a total invested of $46,000. That's incorrect because it doesn't include the losses that I garnered from the Terra crash and the losses that I garnered from the bridge hack on Harmony and the losses that I garnered from the bridge hack on Phantom, particularly the losses that I incurred from the shutdown of the Geist portfolio. So I created an entirely new portfolio that reflects these realities. Mhm. So if we look at my Terra portfolio, I've included the $30,000 of money that I invested into Terra that I lost completely. And so my aims for my investment portfolio is generating the same amount of income that I have at my job without pulling out any of the principal into the investment portfolio. So if I'm making $1,000 every workday, I would like to make $1,000 in gains or income from my investment portfolio every day. That's an investment goal. My other investment goal is that my portfolio has a total of $132,000 invested, but is worth $111,000. I would like to regain the losses that I incurred from the Terra crash, the Harmony crash, and the Phantom crash, and then build my investment portfolio to $1 million, and then build my investment portfolio to $1 billion. I started with $6,000, which shows that if I started with that amount and built it already to $100,000, that it's possible for you to do the same if you follow the same principles that I am following. Okay, so that's my investment philosophy. That's my aims with what I want to do with my investments. Now let's talk about the pragmatic aspects of my investments. Where do I invest? How much I invest, and why? But let's also address an issue that I sometimes encounter. People want to see my investment portfolio. And I think the reason why they want to do that is they want to duplicate my success. My success is not predicated upon what my investment portfolio is. My success is predicated upon what my investment philosophy is. If we start with the same amount of money and the same assets, and a year from now, your investment portfolio is going to look very different from mine. And not only is that okay, but that is necessary because you have your investment aims and goals. You may be a much more aggressive investor than I am, or you may be much more prudent or cautious investor than I am. And these realities that you hold are going to guide and direct what your investment portfolio looks like today, tomorrow, and forever. So I'm going to share with you what my investment portfolio looks like, but it's not sharing that if you have this much in Avalanche and this much in Kujira and this much in Terra, you're going to make this much money. Absolutely not. But I will share what I have where because I choose to be an open book. I choose to say to anybody who comes to me and says, well, you made it because of this, that, and the other thing. You made it because you're rich. I started with $6,000 investment. Is that rich? Somebody who starts with $1 million in investment and has a portfolio worth $1 million did nothing, right? But if I started with $6,000, get to $100,000, then get to $1 million, then get to $1 billion, then you can say, well, I can start with $60. So I can get to $100 and then I can get to $1,000. $1,000 to that kind of investor may be a lot of money, but they can scale it to what their needs are. And I want to show that an investor starting with a small amount, for me, a small amount was $6,000. For you, that may be a very different number. It may be $60. It may be $600. It may be $600,000 and you want to get to a trillionaire before I do. Fine. But with this investment approach, I wish to show that you can build from your liquidity, new liquidity, add it to your original liquidity, build liquidity with that, then build an income stream with that while protecting your principal. And that can be any number that you set your heart on. You've heard the numbers that I set my heart on. So let's look at our cryptocurrency portfolio, my cryptocurrency portfolio. You see that almost half my investment is in Kujira. Then the next big runner up is Avalanche, and then the rest are very small portfolio. Back in 2021, my investment portfolio looked like 50% Coinbase and 50% Gemini, or whatever that portfolio was known as at the time. So it was all a very stock market based approach to cryptocurrency, which is one approach that you can take. I believe there's a lot more potential in cryptocurrency than there is in the stock market. There's also a lot more risk, and there's a lot more things that you have to be careful about, over and above the risks. All right, so what does my portfolio in these blockchains look like? By protocol, you can see that in Kujira, I have equal parts in blue. Then I have a dedicated catch-all orders into Fin. I have arbitrage using Orca. And then I have another portfolio called Trade where I do arbitrage using pivot assets, such as I arbitrate Kujira with Luna, or I arbitrate Manta with Kujira, or I arbitrate there's a specific one, the FBETH portfolio, which here it is, the FBETH portfolio, which I arbitrate Ethereum off of Bitcoin and Bitcoin off of Ethereum. You see that in the center is Avalanche with Benki as the supplier. What I use Avalanche for was there was a period after the Terra crash where there was nothing happening anywhere that I could see, except for Avalanche. After they just had their own crash of going from $120 a share down to eventually $11 a share. So I was buying Avalanche like crazy, and then I would move that money into Benki, and I would then borrow against my supplied amount AVAX, which I would use to fund Harmony, then Phantom, and then eventually Kujira. So Benki is the bank of my entire portfolio. All my money is funneled through Benki, which I supply and then borrow 70% of that, or right now 90% of that, as AVAX, which I then convert to the token necessary. Why? Because the supply for SAVAX is paying 1.6%. Well, big deal. Who cares? But then the supply itself is growing at an APR of 5%. So 1% plus nearly 6% it's growing at 7%. So my supply is growing at 7%. Now let's look on the borrow side. On the borrow side, I am borrowing 1,000 AVAX, and that is borrowed at borrowed at 4.56%, 4.65%, but it's distributing at 1%. So I'm on the supply side, which is 1,500 SAVAX, I am making 7% on. And the borrow side, I'm paying 6.5%, but I'm getting back 1.33%. So that's basically 3.33% that I'm paying. 7% I'm gaining, 3% I'm paying. The bank is paying me a bit over 4% interest, but it's 4% interest including 1,000 AVAX borrowed. So that means $50,000 that is not mine is paying me at an interest rate of nearly 4%. Well, if I have, um, what is this here? Okay. So 50,000 and then 75,000. So if I have 125,000 or 130,000, I only put in, well, I actually, let's look at our spreadsheet here. I only put in 50,000. On 50,000, I have $75,000 in supply and I'm borrowing 50,000. You see that I'm borrowing 50,000. So I put in $50,000. I'm borrowing $50,000. How did that work? Because I was buying AVOX when it was $11 per. And I put it into the bank, and then the growth in the price of AVOX, along with the APR of SAVOX, has built it up to $50,000 investment worth nearly $80,000, which I could borrow $50,000 off of to fund my other cryptocurrency experiments and adventures. Okay, so Blockaverse, we have Kujira, we have Avalanche. So Avalanche, most everything is in Benki. A percentage is in GMX, which is the perpetual trading mechanism for both Avalanche and for Arbitrum. And if you look at GMX, what it does is for the amount of GMX, the token, and GLP, the token that you stake, you get paid in the protocol token. So for Avalanche, you get paid in AVAX. And in Arbitrum, you get paid yields in Ethereum. I am making $50 of interest on the Avalanche side at nearly a daily basis. $50 a day can start to change your perspective on the world. And it's getting paid to me off of about 40% borrowed money. So not even my money is paying me money. And that's why Benki is my bank. Okay, so let's look at the next portfolio. Kujira, I've broken up into several. Not only does Kujira have several protocols associated with it, so it has Fin, which I have catch-all orders using Manta. I invested in 2,000 Manta when it was 10 cents per. And then I did an arbitrage, one trade, where I made 2,000 Manta off of that 2,000 Manta. And then I made another $2,000 eventually, 2,000 Manta eventually off of those gains. Arbitrage is amazing. I started with 2,000 and now I have 6,000 Manta. 4,000 of Manta were given to me via arbitrage. So I have a lot of catch-all orders in Manta, as well as in stables, as well as in Kuji. I started buying Kuji when it went down to 40 cents. I bought Kuji when it was like $1, then went down to 40 cents. I kept buying Kuji and arbitrating Kuji. And really, one of the protocol tokens, Luna, has been doing well on the Kujira blockchain. I've also moved a lot of Luna back to the Terra blockchain, on the Terra 2.0 blockchain. So Fin, I have money in Ghost, not a lot in my main wallet. I have assets in my wallet. Those need to be moved out into more active protocols, which I'll cover in a moment. Blue, I've borrowed USK against mostly ST Atom. I made a mistake and borrowed some Bitcoin off of Kuji when Bitcoin was $36,000. I regret making that borrow, and I'm paying it back. And then Phantom has been doing very well for me, as well as Dot, on the Kujira blockchain. I also have investments in Fuchsia Fusion, and Manta. And so those are the protocols that the developers have set up on the Kujira blockchain. I have my own protocols on Kujira. They're not public, they're my protocols, but let's look at the protocols. The first one is the ethbeth protocol. And what the ethbeth protocol is that I have a wallet address called ethbeth where I have Ethereum and Bitcoin, and I trade one against the other. And I also trade tokens lent to Ghost on Orca. So I have like X wrapped Ethereum for bids on Kuji. Because I hope you saw that the bidder of 7 Bitcoin on Orca, 7 Bitcoin lent to Ghost and then bid on Orca, made anywhere between 100% gain to a 7 times gain on when the Kuji was liquidated with Bitcoin. I'm doing the same bids mostly with Ethereum. The purpose of the ethbeth portfolio is this. If you look at Ethereum and Bitcoin, you see that Ethereum has a 20-day exponential moving average that goes against its price, which gives a pretty good indicator whether to buy or sell Ethereum against a stable. But you can take that one step further and say the exponential moving average of Bitcoin versus Ethereum, or actually Ethereum versus Bitcoin, there is price variation between Ethereum and Bitcoin, or the ratio. That has an exponential moving average, and that exponential moving average gives us an indicator whether that Ethereum is underpriced, so you should buy. So the ratio of Ethereum to Bitcoin is down here, but the exponential moving average is way up here. So if you look at these two, the difference between these two, it shows that the Ethereum Bitcoin ratio price is below the exponential moving average price, meaning that the price of Ethereum to Bitcoin is low, which means that if you trade Bitcoin to Ethereum, you're doing a good trade. If, for example, here, the ratio of Ethereum to Bitcoin is much higher than the exponential moving average, meaning that the ratio is higher priced than the exponential moving average, meaning that if you trade Ethereum to Bitcoin, you are doing a good trade. If you take this exponential moving average from Ethereum to Bitcoin and you trade Ethereum to Bitcoin or Bitcoin to Ethereum based upon the exponential moving average over 20 days, you will grow both your Ethereum bag and your Bitcoin bag. And I have demonstrated this through measures. And as you heard before, measures are one of my core tenets. You need to know where you are precisely in order to know precisely where you are going and how to get there. I'm growing my Ethereum and Bitcoin bags by using Ethereum and Bitcoin to grow my Ethereum and Bitcoin bags. That is amazing. Okay. So that's one of my protocols on Kujira, but it's also on Indigo. Indigo is a protocol that uses synthetic assets that you can stake into stability pools that allow you to stake synthetic Bitcoin where you can make off of liquidations, you can make ADA and you can make their protocol token in Indy for staking. The same with a staking synthetic Ethereum. Same with staking synthetic stable, so that you're making both the protocol token for staking it, but you're also making on liquidations of these assets. When these assets get liquidated, when somebody provides collateral of ADA and they mint synthetic Bitcoin, if the price varies and their Bitcoin gets liquidated, the collateral is used to pay off the liquidation, and it's then distributed to stakers. And that's why I have ADA collected for my staked synthetic assets. So this is a holding portfolio. I'm not going to trade these assets. One, because the price of trades are rather much higher on the Cardano blockchain, Cardano blockchain. Got it eventually. So I'm not doing trades here. I'm doing a holding strategy. So your investments is based upon your strategic approach. And my FBETH trading portfolio on Kujira, I'm trading Ethereum against Bitcoin and Bitcoin against Ethereum because that's a trading philosophy approach. Here is my holding approach. My wager here is that if I hold and stake these synthetic assets, the value will grow over time, which will produce income based upon their value and based upon their yields over time. Another protocol that I've created for myself is the Orca arbitration. Now, this Team Kujira built Orca. My protocol is based upon the supposition that you can grow your portfolio bags value both in amount and value as in dollar amount. So my Kuji bag will get more numerous. So I'll start with, let's say 100 Kuji, it will grow to 120 and then 140, etc. over time. And then the value of the entire portfolio will grow over time using arbitrage by liquidation. So I'm placing bids for liquidated assets. When those assets get liquidated at a percentage of their value, I sell back at the market rate, get back my original token, buying back, and my hypothesis is that the value of this portfolio will grow over time. So that's my Orca portfolio. Orca is a Kujira protocol. My Orca personal protocol or portfolio is an investment into making money using Orca liquidations. I hope you get the distinction there. Then is my Sumo protocol. Sumo Kuji posted at the end of last year a set of tokens that he felt would increase in value over time to a targeted amount. So he said Kuji, Luna, Unstake, Sumo token, which doesn't yet exist, Astro, and Stars would grow over time. And here are his projected targets. So Kuji would grow to $124 per, Luna to $9 per, Unstaked to $7 per, Suma non-existent to $5 per, Astro to $3 per, it's at 15 cents now, Stars to 80 cents per, it's around 2 cents now. And then KP added an additional amount. He said Fusion, Kuji, he's been harping on about Aquila for a while, Wink, and Manta. So I took these maybe lighthearted predictions by these two cryptocurrency people, and I said, What if they're right? So I'm simply holding these tokens based upon what other people said. Now, anybody can say anything about any token. Doesn't mean that that token is going to do that thing. But if I had listened to Sumo when he said invest in Kuji and it was 1 cent per, my portfolio would look very different now than when I eventually got in at 40 cents per. So I'm taking the same understanding. I'm taking the learning that when Sumo says something, he has some research to back up what he's saying. And so what if he's entirely wrong? I lose my investment. Well, I invested $1,000 into these tokens, so I'm losing, $10,000 or so. I'm actually going to lose an actual investment amount of $6,000. I'm going to lose $6,000. Okay, not happy about that, but I've lost a lot more in the Terror crash. But what if he's right about one of the tokens? What if he's right about Kuji? I bought it $5 per. It's now $2 per. Boo hoo. But what if he's right and it goes up to $124 per? That means that I would have a total of $24,000 in worth. So I invested $6,000 and I would now have $24,000 if he's just right once. What if he's right more than once? Well, we add another $10,000, we add another $25,000, we add another $13,000, we add another $22,000, leading to the sum total that if he's right in all the cases, my portfolio grows from $5,000 or $10,000 to $100,000 by simply holding onto the tokens that he recommended in this tweet. So if he's entirely wrong, I lose my investment. And that's the risk that I'm taking. $6,000. Boo-hoo. But if he's right about one of them, not only was my investment worth it, but it was worth it by a factor of 4. And if he's right about all of them, my investment was not only right, but it was right by a factor of 20. So that's a bet I'm willing to take, and that's this portfolio. The next portfolio is the Mensa portfolio. The Mensa portfolio started from the supposition that I could trade LP tokens, and that is coming eventually to Kujira. It has already been in Kujira for quite a while. If you look at the Fin marketplace, you see 2 order books that you can trade LP tokens. That number is going to increase over time. The interesting thing about liquidity pool tokens is that they are tokens. And so you can trade liquidity pool tokens of Kujira Atom against Atom, or you can trade liquidity pool tokens of Kujira Atom against Kujira right now on Fin. But if you have liquidity pool tokens, you could build your own protocol where the tokens intrinsically have value. So you can trade liquidity pool tokens against these other tokens, Atom and Kuji, or against Stable. You invest $100 into the LP Kuji Atom pool by converting to Kuji and Atom and then providing that liquidity. But that also means you can trade liquidity pool tokens against each other. So you can trade LP Kuji Atom against LP Manta USK. What is the value proposition of that? So I started to measure that. And so I measured the liquidity pool of LP Roar Luna and LP Kuji Luna. So I can trade LP Roar Luna against LP Kuji Luna, or LP Manta Kuji, or LP Kuji Atom, or any other LP that exists. I can measure that and I can trade one against the other. What is the value proposition? Well, for me, that value proposition eventually turned into a new set of measurements, and that is I can now measure the value proposition of, for example, Avalanche versus the Benki protocol token key. And so I can trade Avalanche, AVAX against key and key against AVAX, arbitrating both. My aim is to arbitrate AVAX because AVAX has been very well to me. I'm buying it at $11 per. I can, and have we already established, I can trade Ethereum against Bitcoin. But then with Luna, I can, since I have measured Luna against a stable, and other people are measuring that, and Roar against a stable, I can trade Roar against Luna, growing both bags as I go. Or I'm now also measuring Astro against a stable, so I can trade Astro against Luna. And recall that Sumo said Astro is a token of value that is going to go up over time. Same thing for Luna. Luna is a token of value that's going to go up over time. My supposition, not a certified prediction. I'm not going to go there. But if I'm growing Astro against Luna and Luna against Astro, I win when either token increases in value. I do the same thing with Kuji. I'm measuring Kuji against the stable, Kuji against Bitcoin, Kuji against Ethereum, Kuji against gold, Manta versus the stable, meaning that I can trade Manta against Kuji. And I can also trade, as you saw before, Kuji versus Luna. And then now I'm also measuring Atom against the stable. So I can trade Kuji against Atom, growing both one against the other. So a trade doesn't have to mean that you lose one and gain the other. That actually does occur. But if you look at it as a cycle of trading one against the other, you can keep at parity, or you can use for example, the EMA 20 indicator to grow one against the other in a stepwise fashion, which is what I am now doing. But now I'm also measuring Osmo against the stable, which means that I can trade Atom against Osmo and grow one against the other. I'm doing the same thing and have demonstrated successfully that I can measure ADA against the stable and then their meme token snake against the stable, which means I can trade Snake versus ADA. Why am I doing this? Snake is a highly supported meme token on the Cardano blockchain, but it has its own variability independent of ADA. Because it has its own variability against ADA, independent of ADA, I can trade ADA to Snake, then Snake back to ADA, started with 100 ADA, traded, and got back 150 ADA. And I've demonstrated that 4 times already, gaining ADA as I go. Why am I gaining ADA? Because ADA is the currency of the Cardano blockchain, which means that I can buy the synthetics, I can stake the synthetics, build passive income through their yielding and liquidation platforms, and build intrinsic value as the synthetics mirror the values of their underlying token, Bitcoin, Ethereum, and the stable. Okay. And then, of course, when I'm trading ADA to Bitcoin and ADA to Ethereum, I use the EMA 20 indicators to trade advantageously, meaning that if the ADA to Ethereum ratio is below the EMA 20 indicator, it's not a good time to buy Ethereum. It's a good time to buy ADA. And so I wait for the indicator to turn to sell before I transition from ADA to the synthetic Ethereum or the synthetic Bitcoin. Okay, so that's the Mensa portfolio. The Mensa portfolio is the portfolio that is based upon the supposition that you can trade one token against the other token to gain token amounts for both tokens and token values for both tokens for tokens of value. I say that caveat because you don't want to use this approach on a down-only protocol token. Key, for example, was a down-only token for quite a long time before it started getting its own intrinsic value. And then it became a viable token to pivot to build wealth with the AVAX token. My Terra portfolio is comprised mostly around the Mensa approach to trade Luna versus Mayans Roar or versus Astro. Most of the tokens are in liquid staking derivatives such as AMP Luna, but I also have some in ARB Luna. I'm finding that I'm arbitrating more effectively using the base token Luna and the base token Roar than ARB Luna is returning at present. But there are days that I don't trade. I have a family. I have work. And so the ARB Luna is a passive way to grow value of the underlying token. So if you look at my ARB Luna investment, it says I have 219.7 ARB Luna. An initial investment was a year ago of 250 Luna. If you look at the current value of ARB Luna, which is about 1.5, let's see how much exactly. And I measure these daily. ARB Whale, I'm looking for ARB Luna, about 1.5. Then you see the value of the ARB Luna is now 326 Luna. So I started with 200, I converted 250 Luna to 219 ARB Luna. That bag is now worth 326 Luna, meaning that I did absolutely nothing other than hold the ARB Luna, but its intrinsic value has grown over time that I've made just by sitting there an additional 75 Luna out of an initial investment of 250 Luna. Pretty neat for me doing nothing other than just holding that. Okay. I have an Arbitrum portfolio. I basically just, it was started off as a bet to the community. I bet that I could grow a portfolio faster than what Demix was doing with their C asset on GLP, which turned out to be the case. But so now I have invested into the GMX portfolio, which is generating Ethereum. But now, since it's generating Ethereum, I am measuring Ethereum versus the protocol token, which is ARB. So I've measured the stable ARB against the stable. So now I can trade ARB against Ethereum and Ethereum against ARB. ARB is a protocol token of Arbitrum. So if you look at my holdings now, really what I'm using Arbitrum for is to arbitrate Ethereum and using ARB as the pivot token to do so. So you see I have Let's see here. I have a small amount of Arbitrum and I have even a much smaller amount of Ethereum. I'm now going to fund an additional amount of Ethereum into Arbitrum to use ARB as the pivot token to grow my Ethereum base. The blue chip tokens in cryptocurrency are Bitcoin and Ethereum. They've proved that they can exist for more than a decade. So that gives me good indication that they'll exist for another decade. It's possible. It's also possible they may not. The blue chip of fiat currency is gold. So the more gold I own, the more Ethereum I own, and the more Bitcoin I own, grows my portfolio's value over time simply by holding them. But if I can arbitrate them and grow them in that way as well, that also is a bonus. Optimism, the same thing. With optimism, I had invested into various, I started looking at the L2s because the L2s were supposed to be the next big thing. Don't understand much about the L2s to say with any confidence that they are. I think they're in a better position today than they were a year ago. So I'm more confident in trading on the L2s than I was a year ago. But I had put some money into LPs. I'm going to move those monies off of LPs into Ethereum, and I'm going to arbitrate Ethereum on Optimism by using their protocol token OP. And so what I have to do in that case, when that case arises, is I need to start measuring OP against the stable so I can measure OP against Ethereum and use OP as the pivot token there. Not there yet, but it's going to happen very short in short order. Then I have the Cosmos blockchain. Cosmos used to have a lot of protocols as I explored the Cosmos universe of blockchains. Right now, Cosmos is mostly liquidity pools on osmosis around the Levana token. And because Stride, when it was getting its stride, was giving out a lot of Stride rewards on these liquidity pools, I simply staked those. Stride was trading at 70 cents or 40 cents or whatever it was trading at. So I had invested a total of $100 into that. Stride is trading now at $3. So you see that I made some good money off of staking that Stride and just holding it. I also use Levana as a perpetual trading instrument, which now that I'm getting the hang of using the EMA 20 indicators, when the EMA 20 indicators tell me that, oh, Ethereum versus a stable is sell, then I'm not going to put a perpetual in. I'm not shorting Ethereum or Bitcoin. We've seen recently what can happen when you do that. So I prefer not to. But if the indicator says, hey, buy Ethereum at leverage, what I did is buy the Ethereum and then I put that Ethereum onto Levana at 2 times leverage. And then I would check at 2 times leverage, Ethereum would have to go from $3,000 or $3,500 per to 1,500 in order to get liquidated. That would be a rather large swing. So I only need to check once a day. But what happened? So what happened was that if we look at my FBEF portfolio, we go over to the Levana trades. And in the Levana trades, you see that I put Ethereum and Bitcoin into trades. And when I pulled the money out, I made off of a $500 investment, $25, off of a $400 investment, $40, which is around 10%, 9.5%. And then off of a $250 investment, I made $22, which is an 8% appreciation. That's ROI. So since it was only in there a week or two, that's 500% returns, annualized. So if you're using leverage with perpetuals in combination with indicators, you have the potential to, one, if you're using leverage prudently, one, not get liquidated, which is helpful, and two, to make a tidy sum off of the asset that you just bought. So I just bought some Ethereum. For example, I just bought 0.006 Bitcoin, but with leverage, when I pulled it out, I got 0.007. That extra bit of Bitcoin helps me grow my portfolio that much faster. Okay, so that's how I'm using Levana on the Cosmos blockchain. And then Tron, really not much to talk about here. There was the Sun Bank that had stable versus stable liquidity pools that were at the time paying 50% in rewards, but they have a 2-year lockup period. And their transaction fees are $7, $8 per. This is an investment I regret. So when I eventually get around to biting the bullet and spending those transaction fees, multiple transactions to retract the unstake the liquidity, unstake the yields, then withdraw the liquidity, remove the liquidity, and then break up the liquidity pairs and then get it off the blockchain. I'm going to walk away with a very, very slight gain over like 2 years of investment into this. So it was a siren call. It was like, ooh, I can make 50% on a stable LP. And this was before Kujira's Ghost existed. So I had nothing really to compare that to. Now I do. So I'll move this liquidity off the Tron protocol. Fortunately, my investment approach is when I'm going into something new, I start small. So I put $500 in there. And I'm getting $800 out, let's say $700 out after the transaction fees. So I'm leaving with a gain. And since this blockchain is not to my liking, the hit against me is small. I'm not putting in $1 million and then having all that $1 million disappear because I made a imprudent financial decision with a lot of money. I prefer to make imprudent financial decisions, if at all, with a little amount of money. It's better to learn with small amounts than it is to learn with your mattress money, your mortgage money, your food money. So to that end, I would also recommend that every person, I believe, should have their own financial advisor. I have a financial planner. The company is Edward Jones. You can choose your own company. I just recommend that you get somebody who's certified with a reputable company, even if you don't have any money saved at all. And then particularly if you don't. If you don't have money saved, if you're in debt, I would strongly recommend that you get a financial planner or a financial advisor. This is your friend. This is your advisor. This is a person who can look at all your assets that you have, your 401k, your IRAs, your retirement plans, your saved amounts, your estate, and say, okay, you need to start saving more, or you need to redistribute. So your investment approach is aggressive. You need to consider these investment options for that investment approach. And It's their job to watch your money. So my financial planner told me, oh, you made $1,000 last month on your retirement account. That's great. And that's one less thing that I have to worry about. And also, there's a plan in place with another person who's a certified professional looking at it, making financial recommendations for me to decide. Now, if your financial planner is good in this current era, they're going to say, cryptocurrency, I would highly recommend that you do not invest any money into cryptocurrency. That's what your financial planner is going to say if they're good. So why am I in cryptocurrency? For the reasons I gave at the beginning of this video. I wish to prove that starting with very little money, you can build a portfolio that will generate financial independence and financial wealth. This portfolio is a small part of my money. If I lose this entire portfolio, I do not lose my house and I do not lose my retirement. My retirement is under my financial planner's guidance. And my house is being paid for by my job. And I don't have loans and liens against the money from my job. So that's a piece of financial advice that you would get from a financial planner. Don't invest money that you can't afford to lose. And that's what my financial planner has told me every time we meet every month. This is my investment portfolio. So my approach is I have a spreadsheet that looks at the entire investment portfolio across all the blockchains and gives me a summary, a snapshot of where I am standing right now, including how much I invested versus how much it's worth. We're going to change that direction. And then it drills into the specifics of each blockchain, each protocol, each token, saying, I have this much money invested per protocol. I have this much money invested per token. We go back to the wide view and we see I have this much money invested across all the blockchains and the protocols therein. And I have this much money invested across all the blockchains and all the tokens therein. And I have a simpler chart for that as well. With these charts, what I do every single day is I start from tab 1, update the prices using my system in Rust. So I type in, give me the coin market cap prices, then record that into my spreadsheets. Then I go to tab 2 and I say, what do I need to do on Avalanche? I need to measure AVAX versus key. Do I need to do a trade today? Yes, I should buy key at leverage from AVAX. Then I go to the next tab. After I record that information, for example, I record the trades as arbitrage, and I record the history of my portfolio so I can see the value of it over time. I go to the next tab. I'm in the Kujera tab. I have to look at my Fin catch-all orders. I have to look at what's in Ghost. I have to look at what's in my wallet and move assets that are in my alt wallet into active positions. I look at what's in blue, look at paying down my debt against Kuji so that I can free up that Kuji and start arbitrating it. I go to my FBEF portfolio. I measure Ethereum against the stable. Then I measure Bitcoin against the stable. And then I measure Ethereum against Bitcoin. It says, do I have to make a trade? Yes, it recommends that I trade my Bitcoin for Ethereum at leverage. So when I do trade my Bitcoin for Ethereum, I look back at F and it says I should sell at leverage, meaning that we're not in a good position right now for me to leverage Ethereum on Levana. So I'm not going to do that after I make my trade. I'm going to just hold on to the Ethereum. Then I go to the next tab. And I say, okay, so I generate daily a report on Orca saying what arbitrations occurred against which tokens and against which collaterals. Then I say, okay, here are my current bids on Orca, which ones were fulfilled. Fulfilled those, record that information, and then look at my Orca portfolio, including on the whole, what's in Fin. Do I need to collect anything from Fin? What's on Ghost? What's happening with Blue? And behold my Orca portfolio by token and record the history. Then I go to the next tab, Sumo. I noticed that I have some Aquila to transfer over to my Sumo vault from Fin. I also have some other orders that have popped, so I need to take care of those. Record the value of Sumo by token and then by value. Mensa, I have wallets to trade Kuji versus Atom or Kuji versus Luna or Manta versus Kuji. Do trades need to occur there? So I look at my EMA 20s with Kuji or Luna against Roar or against Astro, do the trades there. And then Kuji, do the measures, and then look at my trade of Kuji versus Atom versus Manta versus Luna. And oh, should I look at a trade of Osmo versus Atom or Atom versus Osmo? Go to my Terra blockchain. Pretty much already covered since most of my Terra assets are being used purely for trades now, since I'm out of money market businesses now. I no longer am dealing with money markets on the Terra blockchain or on Miglu. Arbitrum. We talked already about arbitrating Ethereum versus ARB. Optimism, Ethereum versus OP. I'm going to move the liquidity from the liquidity pools into Ethereum and then start arbitrating Ethereum against OP. Cosmos, just waiting on some clearing up here. I need to record when this liquidity comes free. I'm going to convert that to Osmo and then bid that Osmo on Orca. I'm keeping my Levana LPs as they're doing very well right now, but I'm also going to set up a new set of arbitrations on Kujira of Levana versus Manta and Levana versus Kujira once those order books are active. And if you look at my order books here, you see that we have the Levana Kuji order book active, and I have a bunch of bids activated there, but the Levana Manta order book is not yet activated. And look at what every single one of the bids on Levana are at present. Every single bid on Levana, both buy and sell against Manta, are by me. I would really love to see some activity on this order book from other people so that we can get this order book bootstrapped, get it going and start trading Levana against Manta and Manta against Levana. And then Levana, Manta, and Kuji forming a triadic connection of three assets, one against the other. Okay, and then Cosmos, and then Tron. Eventually, I'm going to move the liquidity off of this blockchain. These are my assets. This is my investment approach. I believe in giving back. The crypto community has been warm and generous and helpful and insightful. And I've learned so much from people on the cryptocurrency channels, providing how-tos and tutorials and insights across the board. And because of this help, I've been able to build my portfolio from where I started in 2021, where I was trading cryptocurrency as stock. We all start somewhere. To the portfolio now with my multi investment pronged approach. By doing these videos, by providing these how-tos and articles, I hope to give back to the community what I've received. I hope the community then multiplies that 30, 60, 100-fold. I love you. Thank you.